what a dream run Sequoia Capital is having this year. It's the year of exits. And we're going to be talking now about Freshworks, with Sequoia being an early investor. And like we've been telling you, it's a landmark moment, a watershed moment with Freshworks being listed on the Nasdaq. Joining us all the way from New York City, Mohit Bhatnagar. I'm guessing he went for the IPO, to be there for the bell ringing. I believe there are a lot of them who went via Mexico and are in the US. Mohit, welcome to Startup Central. I, for one, have been chasing you for a long time. So thank you so much for giving us this interview. You're an early believer in Freshworks. If I were to ask you, rewind, do you remember your first meeting with the Freshworks team, with Girish?
I do. First, Nayantara, wonderful to be here. Thanks for having us on the show. And I agree with you. This is a interesting moment that we should all celebrate, because hopefully it's a start of something great and different for our entire startup ecosystem. My first meeting with Girish and Sean with Chennai is memorable for really two reasons. First is I enjoyed the biryani that I had with Sean and Girish. And second is, it really allowed me to meet a very special founder who has a rare combination of product-first passion, along with a deep understanding of how to go to market with that product. See, in our world, we oftentimes find entrepreneurs who are engineers, but I remember that first interaction and leaving it saying, here's a founder who knows how to build products with customers in mind and knows how to sell those to make sure that it meets those customers' needs. So a rare combination and very memorable.
Do you remember who told you about Freshworks? And I'm guessing this is that famous biryani place in, in somewhere near Chennai, which is now gone to London and New York, that Girish also talks about.
Exactly right. Exactly right. You know, food's always at the center of what we do as we build bonds with our founders. So,
okay. So now on to the harder stuff. SaaS, software as a service. Salesforce is of course the mother of all SaaS companies, but Freshworks was the first startup to turn unicorn from India. Now it's going down in history for becoming the first SaaS startup originally from India to ring the bell at Nasdaq. We've all analyzed it, but you, as part of the top team at Sequoia Capital, tell us, why is this so important, and what do you think is going to be the impact of this on the ecosystem?
Now, thanks for bringing that up. I think it's a very important milestone because it spells wonderful things for Freshworks as a company, but more importantly, I think it serves to inspire and show the path for many other young SaaS founders who are building products from India for the world. See, India today has over 1,000 startups that are building SaaS products for global customers. Only 10 of those are unicorns, over $1 billion in market cap. Recently, there was a SaaS Boomi and McKinsey report that came out that said, by 2030, if we play this right, the market cap of SaaS companies that get born out of India could actually hit close to $1 trillion. That's a very large amount. That is larger than the entire IT services industry from India. So that is what is coming up next. And Freshworks in many ways is showing the way for young startups to get inspired and how to quite do this at a global scale.
And there will be a series of more that may look at a Nasdaq listing. For example, Dhruva, another SaaS unicorn originally from India, is believed to be looking at a Wall Street listing. But Mohit, what I also wanted to ask you, has COVID changed the fact that these SaaS companies now need offices in the US to service the large enterprise clients? Is that also changing?
It's a great question. If you look at Freshworks, long before it was popular, they had mastered the art of remote selling from Chennai to customers all over the world. In fact, their first customer that they ever had was an Australian university. And today they have over 50,000 customers all over the world. This whole concept of inside selling, which was done from Chennai by allowing people to buy Freshdesk and over time other pieces of software, is something that lots and lots of Indian startups know how to do. And COVID has caused the rest of the world to learn how to do this remote selling. And so in many ways, we have a lot to share in terms of our learnings with other SaaS companies in the world. I would say as well that PLG, or product-led growth, is again very close to how Indian SaaS companies have built their sort of businesses. Unlike in the US, where a lot of large direct sales teams and sales resources are spent to get companies to product market fit, most Indian SaaS companies use PLG, or product-led growth, as a way to establish that early PMF before scaling with direct sales teams. So I do feel COVID has allowed India to play to its strengths of PLG and inside sales or remote sales.
So do you think more SaaS startups will build for India and build for the world from India?
Absolutely. I think the first wave was all about building products in India for global customers. As India and more broadly Asia matures as well, we will see a lot of startups also go after those opportunities in domestic markets in India and broader Asia. One very interesting thing is in India, we have close to 70 million SMBs. So the software opportunity in India may not just be limited to the enterprise segment of large software sales, but actually to some very interesting utility and productivity software, which will be consumed and adopted by the tens of millions of SMBs that need this software to run more productive businesses. So I think it's an early start, and watch the space for the next 10 years. We're very bullish at Sequoia around how the India and more broadly Asia opportunity plays out for software.
Mohit, I remember once logging into a webinar organized by SaaS Boomi, the organization you were talking about, and you made this point. Why aren't we seeing SaaS startups from India go after SMBs, go after Kiranas? It's a great point, but I remember I wanted to ask you this, and now I have the opportunity to. They're not going to pay as well as the enterprise clients, right? So is this going to have to be a volume game? And if you look at SMBs, targeting them for digitization, is it not getting a very overcrowded space? Whether it's your Khata Books of the world or the Bharat Pays of the world, now even a JioMart and an Amazon are looking at them?
This is what startups do well, Nayantara. They disrupt and change business models. If there isn't a direct subscription software fee paid, there will be other ways to monetize it. Think of all the rich data and the transaction flow that they are now a part of. A lot of these businesses need financial products in order for them to sort of help their retailers and SMBs do better. Think of Shopify kind of products that allow our SMBs to sell better and more efficiently. So there'll be a variety of new monetization schemes varying from subscription fee, advertising, and actual transaction revenue as well. Watch the space.
Okay, watch this space. That's a teaser that's coming in. Picture baaki abhi to trailer bhi nahi shuru hua. But Mohit Bhatnagar, you've talked about how Sequoia is so bullish on SaaS. We've talked about the opportunities, a $1 trillion opportunity. I've got to ask you this since I'm interviewing you. It's been, like I said at the introduction, a dream run for Sequoia. Just look at the kind of exits that are taking place from a Zomato now to a Freshworks. What does this mean for Sequoia and its view on India?
Well, thank you for saying that. Those are kind words. I'll say a few things. First is, look, the markets have indeed deepened in order for us to be able to create these scale companies that can actually support the creation of $10 billion plus companies in market cap. It's because our India market, the revenues that underlie these companies has reached a certain size and scale. This year for us in the India's and Southeast Asia business of Sequoia, we've already had 5 companies go public. This would be the 6th in our portfolio. And there are many others who are preparing to hit the public markets all over the world. We had Zomato, like you talked about, in the food delivery space. We've had Appier, which is a data sciences and ML business for Asia. We had Indigo Paints, which is in the paints category. We had Aptus, which is a financial services company, and Stovecraft. So as you can see, there is indeed a deepening of the market in every segment. This is not just one type of company that's making it and another one that's not. Literally across the spectrum of sectors that we have invested in, we're seeing companies get to a certain size and scale and get ready for public markets. This is very heartening. And I'll end by saying, while we at Sequoia have certainly benefited and are very fortunate to be in these special companies that are hitting the public markets. A lot of other venture capital firms, a lot of our competitors, a lot of our collaborators who have helped build these companies, all VC firms now have a set of winners. So this is not just limited to a few companies and a few firms. This has indeed become a larger ecosystem maturity to get to this size and scale. So it bodes well for the next decade for India.
But Mohit, what we have seen, it also shows us that we are perhaps at an inflection point, right? I think Zomato taught the way. Look at the IPO pipeline that exists at the moment. You have Goldman Sachs saying that India is going to become the 5th largest stock market in the world on the back of these new age IPOs. So what I was also trying to get at is that how has it changed the thinking within Sequoia when it comes to investing in India? How has it changed the thinking within Sequoia when it comes to exits of your existing portfolio?
Look, Nayantara, I'll be honest with you. We are long-term investors. Our fund cycles are close to 10 to 12 years, and in many cases, it takes even longer than that to build these businesses of scale. So everything we do sort of has that time frame in mind. We know that these businesses that have now today become very successful and are hitting the public markets in India and in the US have gone through a company building cycle that started 10 years back, at least for both these companies, both Zomato and Freshworks. They're more than 10 years old. And I think that's the important thing. At Sequoia, we don't want to get carried away with any cycles that will be up or down. We want to stay balanced, and we want to kind of keep investing year in, year out because of the India market's long-term potential. Yes, I do agree with you that when these IPOs happen, they are large events and they cause a step jump in many ways by creating an inspiration for many other founders to get started up. For example, in the Zomato IPO, one of the real benefits was a lot more millennials who typically don't buy and participate in the stock market would sort of start owning stocks like Zomato because these are brands that they enjoy, consume, and have grown up with. I think it's also demonstrated that the Indian exchanges are mature enough to handle fast-growing tech companies that need investment. This was a question before Zomato went public. They've certainly shown the way that many other tech companies in India will follow. Freshworks is showing that global investors in this time of geopolitical uncertainty are really keen to get access to tech companies that emerge from India to actually diversify their global portfolios with having exposure to Indian assets. So I do feel both Freshworks and Zomato in different ways have sort of pioneered in many ways a new path and carved their own path that many other startups will follow either with an India listing or with a US listing.
The pricing, those have also been very valuable lessons. And do you think the ecosystem has understood that? Because it's very easy to get carried away when, you've got the kind of liquidity that you do. But Zomato did show maturity when it came to the valuation and pricing. Ashwath Damodharan might disagree, but that has been said that, it left enough on the table for the investor. And Freshworks also has kind of shown that the very fact that it, only upped its price band, revised the price band 2 days before listing.
Yeah, I think, look, we as investors think again in 5 or 10 year cycles. Price ranges will vary and fluctuate over time. But what you're really investing in is the quality of the underlying business that is playing into a secular trend that would benefit, in the case of Zomato, food delivery and the consumption of food, in a delivery format, or in the case of Freshworks by opening up new sectors like CRM and many other product lines. So as an investor, you can try and finesse, the pricing, but really what you should do is take a step back and see if this business is going to be more relevant 5 years or 10 years down the road, and therefore sort of take a more sort of structural choice bet to see if this is the company that can actually win market share from incumbents and be substitutes for consumers in the way they consume.
Mohit Bhatnagar, you've been an investor in the Indian growth story for so many years now. And look at some of your finds, right? From a Zomato to a Freshworks. So I've got to ask you this one question. How do you see the Nifty and the Sensex, let's say 5 to 10 years from now? Is it going to be very, very different?
Yeah, I'm going to try and sidestep that question. It's hard to predict, how stock markets perform over time. And I'll just reiterate what I said earlier is anyone investing in tech needs to understand that these businesses are very fast growing businesses and are driving new consumer behavior. And I think we've just gotten started with that change. And if you take a 5 or 10-year view, it'll be hard to see why any of these tech companies are not a magnitude bigger than what they are today. And so that's what I would sort of cement rather than get into Sensex pricing.
And since we did this interview on Freshworks, my final question, because I know you've run out of time, but any one anecdote with Freshworks or Girish that you'd like to share with us? Say food for thought.
I'm glad you asked that. I think there's a very important thing, and that is if you want to go fast, you go alone. But if you want to go far, you go as a team. And at Freshworks, as we list today, close to 75% of all employees will own Freshworks stock. And the entire employee base is over 4,000 people. So I really do feel that the Indian startup ecosystem has an opportunity to make sure that folks who are part of it see some serious wealth creation. And the value of equity which has been traditionally underestimated by our Indian startup ecosystem, will be looked at in a new light. And so I would point out that Girish from day one was very keen to make sure that the broader employee base and the broader community in which Freshworks has grown up and benefited from also wins when Freshworks win.
He once very famously said, I want every employee to have a BMW.
That's right. And hopefully that day is not very far.
With that, Mohit, thank you so much for taking the time out and for joining us here on ET Now. Thank you very much.
Thanks, Nayantara, for everything you do. Thank you.